This is not financial advice, not legal advice, for entertainment, educational purposes only. Anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, double check you're still subscribed to the channel. Double check your notifications are on. And if you hit that like button, double check it's working properly, because these criminals are doing everything in their power to suppress the channel, because they don't want more people becoming aware of all the fraud and corruption in the United States stock market. Listen, these bad actors and the banks that finance them are running out of money. Okay? They wanted to believe that they could naked short and they could do it forever, that they have unlimited funds. They do not. Okay? You see the reverse repo dropped to $140 billion, and it's only gonna get worse. And you guys gotta remember, the Feds pumped $500 billion into the reverse repo in January. Had the Feds not done that, the reverse repo would be depleted by now. Okay? And if you guys follow my videos, you know that it's not just banks that can utilize the reverse repo. You have big, like, crypto companies like Circle who put money in a reverse repo overnight in order to get that small interest rate. So when you see this number going up a little bit, it does not mean the bank's liquidities are getting better. It could be other people who are doing well, other institutions that are doing well, that are putting money in the reverse repo. Let me tell you something. They are starving for cash. And if the banks are starving for cash, the naked shorters they're financing, who are naked shorting AMC, GME, MULN, and WBO Quant, they are starving for cash also. And you know how I know? They put pressure on the Feds to buy back $10 billion in treasury bonds because they needed the cash. And then after the Feds bought that $10 billion, they put pressure on them to buy another $10 billion. They actually wanted the Feds to buy back another $20 billion, but the Feds couldn't do it. Let me tell you guys something. These banks are having real liquidity issues. You guys know what's going on with the auto loans. You know what's going on with the credit cards. You know what's going on with the commercial real estate. And it's slowly moving into residential real estate also. And we all know that the unrealized losses are 14 quarters in a row. 14 quarters in a row of unrealized losses for these banks. They are in trouble. They are mirroring 2008, and we all know what happened then. Bottom line is this. The banks are running out of liquidity. They're running out of money. And when the bank's liquidity runs out, they are not going to have any liquidity to finance these bad actors, naked shorting AMC, GME, MULN, and WBO, and a whole lot of other stocks. And when that happens, there will be margin calls. There will be forced liquidations. And at that point, a lot of these stocks are going to start rising to their real value and beyond. Anyway, please leave some comments. Tell me what you think. Do you think that $140 billion is enough to keep the bad actors naked shorting for the rest of the year? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.